Amanda Walker with a look back at the 2024 IMF Spring Meetings.
It is a great way to start by saying that in everything we do, big or small, we can express our appreciation, our love and our care for people and for our planet.
We heard the headlines of the flagship press briefings.
The global economy continues to display remarkable resilience, with growth holding steady and inflation declining.
What we have seen is really a tremendous amount of optimism in financial markets.
Tackling debt and deficits today helps avoid more painful adjustments later.
There were also discussions about problems like climate change, which of course affect everyone on the planet.
If climate change is not addressed in the upcoming decades, we could see increased natural disasters like the ones Poseidon inflicted on Odysseus.
And how can governments get the most out of technology?
The reality is almost anything that happens in your government now touches a technology in some form or another if you don't have infrastructure in place, if you don't have your data organized, if you haven't done if you haven't laid all the foundations that we're talking about here, I'm not sure you get to go play with the shiny things, and you certainly don't get to do them in safe and secure and inclusive ways.
Several panels discussed the implications of AI.
AI could potentially have really a profound impact on the global economy. And some have even argued that it could be at the scale of the Industrial Revolution. It could raise livelihoods, it could raise incomes across all countries.
Well, there's virtually no point in talking about AI unless you're talking about the application of it. It doesn't exist in a vacuum. I'm not worried about existential risks from the robots taking over. I don't care about the paperclip problem. I'm very interested in how actors deploy AI in ways that will change society, change security, change the economy, and change the stability of our political system.
Here is the biggest risk. What if a technology that learns on its own starts learning wrongly on its own, and that exponentially goes to lunacy on steroids? Then what?
The last seminar of the week asked, where is the money going? And examined capital flows and growth.
So when you have lower debt in foreign currencies, and when your monetary policy really deals with your domestic issues, you have a lot of credibility, and that really helps you a lot.
Resilience starts with good policy frameworks. And good policy frameworks have got to be thought about first about whether they can be implemented.
This is a good time to rebuild fiscal buffers, do it credibly, gradually. You don't want to break the economy. You need to use these moments to build up credibility, which you might then have to use a little bit in the future.
Delegates, governors and country representatives met to talk about their goals and their challenges. And the managing director even shared one of her fears.
This is what I think. I wake up in the middle of the night and I think how we can help our members lift the productivity. I don't know whether you looked at the graph that shows the trajectory of global growth, medium-term prospects for growth. It looks like a Swiss ski slope. And we sure don't want that for the future.
Hello and welcome to IMF Today. I'm Amanda Walker. What a week at the 2024 IMF Spring Meetings. Each day we've been giving you the big headlines. Today we're here to wrap it all up as things come to a close. So what are the takeaways from the week and what's next? I spoke to Jayla Pazarbasioglu, who is the director of the IMF Strategy, Policy and Review Department, earlier today.
It's been a hectic week, very hectic, but it's a sense of the global community coming together to discuss challenges that no one country can address on their own. So it's been really good to have this discussion of economic challenges, what countries need to do individually, what they need to do collectively, despite all the difficult background in terms of geopolitical developments and so on. So I think I came away with three key takeaways. One, there was a lot of discussion about, and the buzzword, soft landing. Right. So that risks are more balanced now. We didn't see the worst of it. We didn't see a recession. Inflation is coming down. Yes, there are ups and downs, but that inflation is coming down, and unemployment is at its lowest level. So it was, the first message was this sense of kind of, we are over the worst, and we didn't experience the worst outcomes. Mm-hmm. But then it comes with a big but. So that's the second takeaway I have, which is that there are challenges ahead. And that's because buffers are depleted. That's because there are huge divergences within and across countries, inequality, scarring. So some advanced economies seems to have done better in this crisis. Some emerging markets have been incredibly resilient. But then low-income countries, some of them are much worse than what we expected that they would come out from this crisis. So there is a lot of differentiation and divergence across countries. So that's the second message, that we need to be, we need to recognize that there are challenges ahead. And then the third key message is that we have global challenges like climate, digital, AI, that there are huge opportunities and risks from these global, let's say, global transformational changes, and that the community has to come together to address these challenges, including, as I mentioned, climate, digital agenda, as well as helping some of the vulnerable countries which really have excessive debts and have to deal with that debt vulnerabilities, that we need to support them. So those were the three key takeaways.
Okay, you mentioned the resilience of those emerging markets, a bright spot. So how do we keep it that way?
Yeah, so I think that's very important because, you know, I joined the fund many years ago, and we have seen emerging market countries go through sudden stops, what we call when financial flows to those countries decline very sharply, and we have seen crises in those countries. But yet, both after the global financial crisis and after the current difficulties, we see many of these countries actually very resilient. And part of it is, I think, due to structural reforms in those countries, and very importantly, strong institutions, strong policy frameworks, be it inflation targeting, be it central bank independence, be it much better fiscal frameworks. So I think an important lesson is that if countries do the reforms and increase their buffers, they are much more resilient to shocks. And we did see it in the context of some of our largest emerging market countries, which used to have problems in the past.
So you've expertly outlined your main messages from this week. How do we take those and move ahead with them? What are the priorities as we look to the future?
Yeah. So what came out also during the meetings was actually appreciation of the work of the fund, but also expectations from the fund. So we heard this from many delegations bilaterally, but also at the IMFC and other meetings that we had with the membership. So what does that mean for us going forward for the fund? One is the huge importance of surveillance. And surveillance is a funny word, but I like the way it's defined in medical terms. It's like a health check, it's crisis prevention, making sure that countries do the right, take the right policies, do the right reforms, and so on. So there's a lot of expectation from the fund in terms of structural reform, structural policies, so that we can get growth back on track, right? Medium-term growth looks lackluster. So how can we have growth-enhancing reforms, smart reforms, as many have called them, which are also less costly? Not just because fiscal buffers are small, but also these are costly reforms in terms of those that are vulnerable for the society. These are costly reforms. So really advising the membership on granular policies to adjust to changing shifting transitional conditions, but also making sure that they take the reforms to be able to enhance growth. So that's the first one. Second, as I mentioned, there are divergences across countries. So how the fund can best support financially countries. So good programs, support countries with good programs, good reforms, as well as making sure that we have the right lending toolkit to support them. We are doing a review of our poverty reduction and growth facility. This is an important reform so that we can best support low-income countries in terms of concessional financing for those that are the most vulnerable. So that's on the lending front. The third one, of course, is our very much linked to our surveillance work also, is capacity development, supporting countries with institutional reforms, institutional strengthening, and so on. And finally, making sure that the institution is strong, and that means we had a successful 16th quota review, 50% increase in quotas across the board. And now the top priority is make sure that this is effective. We are hoping by the end of the year, countries go through their parliaments and this becomes effective. And then, of course, working also on what we promised the membership on the 17th quota review, which is going to be very important in terms of making sure that the institution is strong, well represented, and well governed.
Jayla, thank you so much. So much going on. Thank you for outlining it for us.
Thank you.
Now, even with everything that's going on in the world, representatives from the 190 member countries of the IMF and World Bank still came together to take part in these meetings this week, and that speaks volumes. Joining me now is Julie Kozack, who is the head of the IMF's Communications Department. Julie, it's great to see you again. Thank you for joining us.
Thank you for having me.
So we're on Friday, we're almost at the end. What are as you absorb everything, digest it, reflect, what are your key takeaways, would you say?
So a few key takeaways for the week. First is that the global economy continues to be resilient, and this is good news. We've revised up our growth projections slightly, inflation is coming down, but underneath this, we see a lot of divergence. So we have some economies like the US doing well, low-income countries are at risk of falling even further behind. So this divergence is a source of concern and worry. We also see that the medium-term growth prospects, so growth prospects for 5 years into the future, are very weak, and they're the weakest they've been in decades. So that tells us that we have a lot of work to do to really lift these growth prospects over the medium term. Debt is still high and remains an issue that needs to be tackled kind of across the world. So there are still challenges out there, and bringing all the policymakers here together to try to tackle those challenges has been really important.
Yeah, and I know you've been everywhere, I'm sure it feels like this week. What have you sensed about the level of engagement?
The level of engagement is very strong. Despite the challenges that the world has, fragmentation, conflicts, people still have been able to come together here at the IMF, at the World Bank for our spring meetings to engage on economic issues, to try to solve those issues together. That engagement is very strong among the membership, the 190 members that you mentioned. They are engaged and have been able to agree on some key priorities, but also with other stakeholders, our CSO community, our parliamentarian network, the media. So we do find a very high level of engagement and a desire to work together to solve issues where we have common challenges.
And you mentioned that word, as many people have this week, fragmentation, but here we all are in this building. What insights do you have on the kind of, everyone's got their problems at home, there's plenty to do at home, but people are still here, people are still sensing that need for global cooperation. What are your thoughts on that?
So what was really nice to see is that there is agreement on some of the key policy priorities. First, our membership, our 190 members were able to agree on some of the policy priorities that the managing director put forward in her global policy agenda. Of course, the need to finish the job on inflation, but also to rebuild fiscal buffers, to revive medium-term growth prospects, and to renew our commitment to the membership. Second, there was an agreement that the fund has a very important role to play in helping our low-income members. I spoke about the divergence before, the difficult situation that many of our low-income and vulnerable middle-income countries are in. The fund has a role to play in helping this very important part of our membership. Third, there was a recognition that debt levels are up globally. This is particularly a challenge for countries facing debt distress. We convened here the Global Sovereign Debt Roundtable with the World Bank and Brazil as G20 chair to make progress on how to improve the debt restructuring process. How can we come together and make that process smoother and speedier for countries that are in debt distress and need a restructuring? And finally, there was an agreement that the fund should be financially strong. In Marrakesh, there was an agreement to increase our permanent quota resources by 50%. And now we see continued efforts to help us make our low-income instrument, our PRGT as we call it, financially strong. Also our Resilience and Sustainability Trust, financially strong. So this vote of confidence in the financial strength of the fund has also been really important from our membership.
Okay, Julie, thanks so much and good luck with the final few hours.
Thank you so much.
Thank you. Now, 6 months ago, we were wrapping up the annual meetings in Marrakesh, and this week I had a chance to speak with Morocco's Minister of Economy and Finance about what those meetings meant for the kingdom.
All Moroccans are so proud for having hosted the annual meeting IMF World Bank in last October. It meant a lot for Morocco. Actually, it happened a month after the earthquake. So it showed the solidarity of the two institutions, the whole world. It happened for the first time after 50 years in Africa, and we could showcase the progress Morocco have made, Africa have made in many areas. Also on, I would say, more local point of view, it has definitely helped Marrakesh on tourism side, very important. Really the numbers are booming, very interesting. And finally, I think that we have very, very interesting universal discussion around, I would say, the financial architecture, We also have great announcement of Marrakesh Declaration. So great memory and a great hope for Morocco, for Africa.
The annual meetings will be back here in DC this fall, but in 2026 they'll go on the road to Thailand. The Thai delegation set up a booth at these meetings, looking ahead to all it has planned. Work is already very much underway to make sure everything is prepared for those 2026 meetings. Well, what a week it's been on IMF Today. We've tackled the questions of what's next for interest rates and debt, how do economies build resilience, and can AI boost growth? If you missed any of our episodes, you can catch them on imf.org. I'm Amanda Walker. Thank you so much for joining us this week. We leave you with some of the most memorable moments, memorable images from this week, courtesy of our great photography team. Thank you so much.